All right, you have a buy rating on this company, a 101 price target. That's kind of in line with consensus. But the company essentially lowered its guidance from the previous numbers it gave out there. Why is this company still an attractive buy, especially when the CEO is even saying it's just less uncertain? He's not saying there's certainty. He's saying it's just less uncertain.
I thought it was a pretty positive release, and we would definitely be buyers on this today at the open. They called out a 6-point sequential increase in demand that began in early July across the total system, with business demand increasing double digits sequentially. So you combine that with the supply that's coming out of the system. I don't think it's the case for all airlines, but similar to Delta last week, I think we're kind of getting the all clear sign for the full service carriers right now. So I think there was a lot of uncertainty about how Newark would weigh on the full year outlook, and I think I wouldn't weigh too much in on how the full year guide shook up. And I think I think a lot of investors we speak with, this was better than they had thought that the company might be able to do when Newark was first having problems earlier in the quarter. So
better than a lot of people thought. Still, the stock's down more than 3%. I want to go into these results and tell me, is this a read on just United or the broader airline industry? Domestic revenue down almost 1%. Atlantic revenue up 2.5%, Pacific revenue up almost 9%, and then the premium revenue up about 5.5%. What does that mean?
I think we're seeing a K-shaped demand environment for consumers, and we're seeing that play out in a K-shaped environment for airline profitability, with airlines like United or Delta showing pretty robust profitability in the face of volatility, and then the airlines more reliant on the main cabin, like leisure demand. They're having trouble.
Tom, does that mean domestic-focused airlines are less attractive? When you talk about K-shaped, what are you talking about? Like a bifurcated consumer where people with more money, they're willing to go international, but domestic travelers are less willing to spend?
I think so, and I think higher income, like airlines that have exposure to higher income consumers, and whether even if it's not the long haul international, but the premium cabin seating, the loyalty revenue streams like that, just the higher margin, less volatile revenue streams relative to economy class tickets.